East Africa's largest listed firm, Safaricom, has reported a 23% reduction in losses in its Ethiopian operations, as well as an increase in revenues and net earnings. But in the 3 days since those results came out, its share price has fallen by nearly 5%. Now, between April and September, Safaricom reported an 8% rise in group revenue, with the Ethiopian unit tripling its revenue to nearly $48 million. Now, compared to the same period a year earlier, losses in Ethiopia narrowed to $223 million. That, however, did drag net earnings for the company as a whole down from $450 million to $225.7 million. When I spoke to Safaricom's Chief Financial Officer, Dilip, I started our conversation by exploring the impact of currency fluctuations on the company's results. The firm is no longer having to use hyperinflation accounting, he says, but the impact from the birr's 20% fall against the American dollar so far this year is not the only currency hit on the books.
Of course, if you now convert that into dollar terms, with the depreciation, last half year, just before the currency reforms, were about 57 to a dollar. And I think we closed September with about 114 and March with about 125. And September this year we closed at 146 to a dollar, which is like about 17% decline, devaluation, and then about 33% devaluation in the euro. There is something happened also globally on euro. I don't know whether you've noticed or not. Euro became very stronger compared to dollar, and it has impacted, in fact, Kenya results as well. We have to take also a currency hit on account of euro, although dollar to Kenya shilling remained very, very stable.
How much exposure do you have, at least with respect to long-term credit on the euro?
So the debt. So there are two parts of the impact that comes in. One from the long-term debt, that's in dollar, so that's not a problem. Problem in Ethiopia, because we have the currency depreciated 17%, but not to the extent of euro, which depreciated 33%. But the majority of our dues outside of what we pay in ETB in Ethiopia, both for Huawei and Nokia, is in euro. They are not allowed to accept, this is geopolitical problem, that they cannot accept dollar.
So we're still sticking to the break-even target for 2027?
Yeah, that's correct. And I reiterated that yesterday. And I said the questions was more of what gives you that confidence and how do you think that's going to play out? So our point is, our commercial execution in terms of, because we're adding more sites, and just for your information, around 400 sites were out of bound for data. So these are called data bird sites because of some security reasons in Amhara region. So end of September, pretty much all are now operational. So you are able to actually sell, because our proposition was data. So you are not able to really acquire new customers. So we are able to do that, and we are also adding new sites. So with all of that, we're saying, okay, H2 will be better than H1 for Ethiopia, and the level of currency depreciation which has happened in first half is not likely to be in that level. And then the other part, a very, very important part which I have not spoken about, is we did expect some market repair in terms of price ups, industry as a whole. And we are not the only one. I think we mentioned it, but you saw the Ethiopia Communication Authority instituted study, which is the World Bank study, which has been referred. By the way, this was by the regulator whose institute asked them to look at, after 3-4 years of operations and liberalization, what's actually the industry scenario. And actually we welcome that report, because some of the things that we mentioned before, spoke about before, is what also coming in that report.
Because that sort of feeds into your cost base in Ethiopia, especially with respect to wholesale MTR termination cost, right?
Yeah.
Because what that report, it's 33 pages, made for really interesting reading. And one of the main arguments they were making was that the MTR rates, the mobile termination rates that Ethiotel was charging Safaricom, didn't quite make sense. They were way, way overpriced relative to the cost of actually providing the service.
And that is just one of the problem. The other issue is that operators, industry selling services at lower than the retail price, than the lower than the cost, which is actually not allowed by any regulator anywhere in the world, because then what are you doing for to the industry?
Effectively, you're burning shareholder
Yeah,
capital.
you're basically burning. So I think we are expecting some price correction to happen in October, but didn't happen. So coming back to your question, that we are still keeping our FY27 based on this, and also you're expecting that some price correction will happen going forward. It's not about why, it's more about when.
If there isn't a cost adjustment, if the MTR rates, the wholesale MTR rates are not revised, for the sake of argument, in 2026, how does that then affect the financial viability, the performance of the Ethiopia business? Will it have a material impact, rather, on Safaricom Ethiopia?
I think I will say more than MTR. So remember, MTR actually has been on a gliding path.
Yeah.
Okay, there is scope for further reduction, but the one which is the real concern is the retail price. Yeah, retail price is below cost. Our view for the industry, long-term health and sustainable business, you can't continue like that. You'll not be able to sustain a business just like that.